I made 46% in 1 year investing in my stock. 500, it starts 10 to 13%. And the highest return annualized of individual stock has ever gotten in the last 10 years is 79% every year. I got a little more than half that, and 4 times more than the market as a whole would have returned on an average year. All right. I'm Max James. If you want to learn about finance, investing, business, or just improving yourself in general, you might want to subscribe. Let's get right into the video. So I'm going to explain how I did this with this pair of AirPods. All right. Aren't even real. This is not an ad for Apple. Just to explain what a durable competitive advantage is, or what we're going to call a moat. All right. So imagine these are first gen AirPods. I want you to look at them. They're nice. They're sleek. They're new. All right. You know what I'm saying? They have good range, good battery life, and there's nothing like them on the market in the past, at least. So Apple made this completely new product. People love it. Nothing out there like it. Now, other brands start popping up, fakes start popping up, and they start making similar products. And just like when they released the iPhone, they start making new ones. They have the second gen Pro, which is this, third gen, fourth gen, and soon fifth gen. So that's the durable part. And the competitive advantage part is all of this stuff, you know what I'm saying? Connects with Apple, Apple ecosystem, all of that. All right. This book explains it better than I ever could. I already made a video about that. Check it out on the channel. I say all that to say everything that people saw in AirPods, I saw in Tesla a year ago, and actually multiple years ago. I started investing when I was 11. So I saw Tesla. Now let's think about everything we just said about the AirPods. Let's attribute that to Tesla. Okay. First of all, electric cars. That already cuts off 80% of the market. 95% of the market, actually. So that's already special. They're clean, you know what I'm saying? Better acceleration, all that. Now, Tesla, they have a better infrastructure network in terms of charging stations to any other electric car company. Or there weren't any in the beginning, okay? They're faster, sleeker. A lot of people like the looks. Whether you do it, well, that's irrelevant to this. They have, now, what's the thing about the other parts of Tesla? They have energy sector. They have solar panels, batteries. They have autonomous cars. They have autonomy. So they have robots. All right, they have all this, and I explained in this video how all of that equals to why you should invest in it. I'm not trying to sell you anything. I'm not a financial advisor. I'm just a guy on the internet, but I'm gonna explain why I did it. So I saw all of this as I explained in the other video, and just like with the AirPods, how they have a moat, Tesla also had a moat. They have something no one else can replicate, and as in a company as a whole, no one can replicate to an entirety. I'm going to put up here my portfolio. As you can see, I thought it was 800. I looked at it, it was 900 when I started investing on this particular portfolio. You can see the balance now, it's 1300. If you go back to a year ago, and you can see the 46% gain, or $440 of realized, or at the time unrealized profit. So you look at the buying power, you can see half of that I basically made out of thin air by choosing something that was less valuable, and it became more valuable. So I want you to look around at the products you use, products you see, companies you see. Don't go on YouTube. I want to say, yeah, definitely. All right, don't go on YouTube for direct financial advice, okay? Don't do that. It's not viable making money opportunity. It just won't work over the long term and even over the short term. And I know in my other video I explained why Tesla was a good investment. That's why I explained why it was a good investment. And it's only a year. We'll see over the 10 years if I'm wrong, but I was clearly right. A 50%, almost 50% gain in a year. So I was right. But that's neither here nor there. I say all that to say You should go on YouTube, just like I did, which is where I got 80 to 90% of all my information about anything from, which built my mind to think about things for myself. You should learn about how to invest, what investing entails, but you should not go to it for specific investments. You should read books like this to learn the tools you need to invest. Again, but you shouldn't look for specific investments. Then, once you compile all that information in your head, now you can go and look out at investments. All right, so let's say we go to a company. Let's go to Walmart. Walmart stock. All right, $90. Let's see, PE 45. By the way, if you didn't know, Walmart has the highest revenue of any company. Not profit, but the highest revenue of any company in the world. Okay, so if I'm looking at Walmart with all my investing knowledge and whatnot, I'm going to see the growth potential for the future. Okay, so market cap is 729 billion, which is a lot to say the least. 729 billion. Very few companies in the world or ever have come close to touching that, let alone ahead of that. All right, so if you look over the last 6 months, it's grown 33%. Year, 70%. 5 years, 128%. All time, 428,000%. Goddamn. All right, so if we look at all that, the growth potential for Walmart, and if I'm not that bullish on it, I'm looking at 729 billion, we'll say 730 billion. There's not much it can grow in terms of its market cap, in terms of how much more it can sell. Like how much more can it move relative to its market cap today. It's like when people say like Dogecoin, or not, that's a bad example. People say like Shiba Inu coin and crypto, say it goes to $1 when that's like impossible because the whole market cap of crypto has never even touched that. You get the point I'm trying to illustrate. So my point is that with this, over the next 20, 25, 30 years, even if it grows, let's say 100%, compare, let's say I got half that in a year with Tesla. Now I explained in the video why, even though it was like $1 trillion this time, how I think it can grow so still grow so big. But I say all this to say these are the type of things you have to think about when you're picking companies with a moat or durable competitive advantage, which is the most important thing. Now, what I'm doing now, for other reasons, as I said in another video, why I sold my Tesla shares, but now I'm DCAing back in, which means dollar cost averaging, which just means over the next weeks, weeks, months, years, you just put a little bit in at one at a time over time, so that you're not buying at the high highs when you put a lump sum of money in, or the low lows, which would actually be good. It evens out and it averages out, so that over time you're buying at the average price, and as long as the company's going up, you're also going to be able to sell at an average price, which means it's more of a nothing's a guarantee, but it's more of a guarantee, safe, responsible way to invest. You should never put a lump sum of money in unless you're betting on yourself and you have absolute conviction in what you're going to do. So I'm looking at, all right, so look, I got earnings February 20th. They, as I said, our market cap PE ratio, which means the price to earnings ratio, which means how much you're paying to versus how much you're earning with the amount of company you own. So you're paying a 38 times multiplier. So let's say we're not interested in Walmart. You're like, I'm trying to grow my money 10, 20, 100, 10,000x. I don't want to invest in such a big company. So I'm going to look at some mid caps. So you're going to find companies with a durable competitive advantage. You're going to see, are they doing something that no one else can do, not many other people can do, and they're innovating in a way where they're continuously keeping this competitive advantage up, just like AirPods are, just like Tesla is. So that's my story. I hope it was okay. You understood it, how I gained so much in a year, and you can apply the principles, and with other videos of mine that are coming out soon, that have come out, and other videos on YouTube on how you can find companies like this. Read this book, link in the description. And yeah, it's been Max James. Peace.